Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as I go through it, generally related to three different topics: wealth building, commodities, and or financial topics. Let's dive right in, take a look, see what's going on today. If you want to follow me at _finance, and if you want to join our community, finding-value.com, where I dive deeper into all these topics, subjects, looking for investment opportunities, sharing those opportunities with everybody in the community. I do that through midweek updates, released Tuesday night, Wednesday morning, or through Q&A sessions that we have on the weekend, either on Saturday or Sunday. If that interests you, you can type in special as the coupon code. You can see it in the lower left there. And it will save you 50% off the first month only on a monthly membership and a $100 discount on the yearly membership. And you can always swap from a monthly to a yearly. Starting off with Dow Gold equals 1. SILJ, which is the junior ETF of silver miners, is breaking out of a big cup and handle. I love that a perfect two-headed inverted head and shoulder is embedded within the handle. It is not out of question that an impulse break could take price north of $70 next year as silver also explodes higher. There's the shoulder head shoulder pattern in the handle. Now, the only thing I'll say that's a little bit different here is a cup and handle is a continuation pattern. Generally, you come up into it. He's got this called there. It doesn't really matter. Really, all that matters is that this is resistance and that we are breaking through resistance. He has the size of the cup being the potential move higher up to about $70 a share. Now, another thing I want to make a comment on is as gold and silver really starts to get going here, which, I mean, it is getting going, don't get me wrong, as it continues to move. If you look back at history, when we get these big moves in gold and silver, a lot of the times the move starts when the market has a slowdown. The market started to slow down in 2022. That slowdown has been with us since, I would say, the end of 2022, September of 2022. And when these start to get moving, in particular silver and the mining companies of silver, that means you're progressing closer to money coming through the system at some point. But we still need to get through that rate cutting cycle. And this fiscal stimulus, I think, is confusing everybody. They're also releasing a lot of bonds on the short end of the curve. So fiscal spending continues to, I'll say, muddy the waters on a potential slowdown that may have already occurred or is occurring, because nominally money just keeps piling into the system from fiscal spending. We don't know exactly what's going on behind the reasoning of lowering of interest rates. Now, some people say, "Oh, no, we know it. It's the unemployment numbers." Well, do you think that they're messing with the numbers? Yes. Well, what makes you think that they're not messing them lower? We don't know. We don't know if they were messed higher or lower. I mean, a lot of people have their biases. They'll say, "Oh, it's definitely they were cheating the numbers during the election," and that those are all now basically out of the mix there, revised lower. It's like, well, I don't know. I don't know what to believe anymore with the numbers. But this is the chart. It's breaking out. Silver looks fantastic, and the junior companies are starting to heat up here. We could go vertical here. We could. Speaking, keeping along the lines of SILJ, this is SILJ versus GDX to give you guys an idea of kind of where we're at. Um, in my opinion, when I see a falling wedge like this is SILJ versus GDX miners. We haven't broken out yet, which means that SILJ hasn't really started to rip yet. Um, when it does, it also will signal where we're at in the move. So as we go through this, GDX moves first, which it has. We're down with SILJ trying to break out of this falling wedge here probably pretty soon. And when it does and it starts to extend a lot against GDX, it means we're later in the gold and silver cycle. And this is something to watch. But I think we could see a big move here. We could see silver juniors really, really move. And then there's SILJ versus GDXJ. So it's the juniors versus the juniors. Another falling wedge that needs a little bit of time to develop. So that's what we've got there. Here's some other ETFs that I follow, SLX, COPX, and GOEX, which is Gold Explorers. I see a kind of a falling wedge into a double bottom, a breakout, a retest in 2022, and we're right before another breakout to basically 52, well, 5-year highs, whatever it is. We're right there against some resistance. COPX has broken through that resistance. It's a falling wedge into a double bottom, breakout, retest, and now we are breaking out of that resistance. SLX is going to follow COPX in my opinion. Now, here's another thing to think about. If we're going into a recession that everybody claims, why are copper equities breaking out to highs here? I mean, are they basically saying that the steel people buying steel companies are wrong and those that are buying copper companies are wrong and that we're going to get this recession deal? Obviously, these can be impacted. I'm not saying they can't, but it is something to take note that we are breaking upwards right now, which makes me think that whatever's coming is going to be inflationary. And this is GOEX, the Global X Gold Explorers ETF. Yeah, that thing's ripping. That thing is ripping. We got through resistance here, and it is ripping higher. So they all look really good to me. And it's more data indicating that, to me, it looks like whatever's coming is potentially inflationary, and potentially it could be that the economy could be recovering. Now, which economy am I talking about? Aren't a lot of these influenced by the Chinese economy? Yes. They have a big impact on these materials. So the Chinese economy could also be firming up, while maybe the American economy isn't as firm as maybe most people want it to be. Ray Dalio says hold 10 to 15% of your portfolio in gold. Bridgewater founder Ray Dalio advises investors to keep 10 to 15% of their portfolios in gold, calling it protection against debt-laden markets. He warned rising U.S. debt costs squeeze out other spending, comparing the risk to a clogged artery heading for a heart attack. Speaking at Abu Dhabi Finance Week, Dalio noted gold's lack of correlation with other assets and its tendency to rise during crisis. So it has been obviously rising quite dramatically. Now, the question I think a lot of people might have is gold rising because of this debt crisis? Or is gold rising because we are in cycle like every other cycle? I don't know. I can't tell you the reason. I think that it could be rising because of the debt, the debt cycle. And I think it is also rising because of other cycles that we are entering too. So, I mean, yeah, it's a great spot to be because I don't see anything that's really a headwind at this time. So yeah, it's fantastic. So I think it's just cycles stacking up and everything becoming a tailwind. Stagflation is what I mean by that. It's stagflation, which is a part of a market condition, and then also just the absolute debt level on top of it. Aluminum about to get jiggy with it soon. This is the price of aluminum. I said 26.50 is kind of where that big resistance line is. We're at 26.66. We are hopefully breaking through soon. This is one to watch, is aluminum. Here's another one. I said bullish, URA. Tell me how that isn't bullish. Yeah, you know, here's the thing, guys, and I just see these charts one after the other. We had SLX, COPX, we had GOEX, which is the gold explorers, and here's URA breaking higher. If we're going to go into a recession, why is this breaking out? Why are we ripping higher here? Is this, I mean, in 2020, we were pulling back in 2018, 2019, 2020. We are accelerating upwards at a rapid pace since 2025 and onward, since April of 2025. We are ripping. That just doesn't seem like that. Only Uranium says 4 years lost since November 2021 highs. Oh, come on. What a pansy. What a pansy thing. This is all bullish. This here is wave one. This here is wave two pullback, kind of an ABC correction. And then we are breaking out of that. We're going to go way up here. Sometimes you have to wait for the big breakouts. That's the way it is. 2020 was the bottom. If you're smart enough and astute enough to get in at the bottom, pat yourself on the back. If you're still holding, perfect. You made the right decision, in my opinion. Everyone has, a lot of people always have things to say, like a lot of negative people. It's like, oh, you know, um, I'll just make these comments. You can't time the market perfectly, no matter where you're at. You can't time it perfectly. If you could time it perfectly, then the people who are timing the market should be multi trillionaires. But guess what? They can't. So, what can you do within the strategy that you deploy? What can you control? Well, you can control what you buy, your position sizing. You can control when you buy it. And hopefully, you're buying it when it's underpriced and undervalued. And hopefully, it's at the beginning of a cycle. But you don't know with certainty how long some of these sideways actions can be. You can try to identify fractals and patterns and then try your best, or you can sit and wait through it for the entire bull market, make absolute killing, beating every single best investor in the world on a percentage basis, compounded annual return. You'll beat everyone if you ride the bull market from bottom to top. I did scenarios of picking companies that were just cash flow companies. I'm not even talking about the speculative stuff, right? And I got compounded annual growth rates of last bull market. If you could identify the bottom and the top, and this was doing it rather well. I'm not saying I just took a random group of 10 companies, calculated if you had equally weighted all of them, of the 10, and they were just, again, cash flow companies of mid cap companies, small to mid cap companies. Your compounded annual return, if you got them to all work and you timed them very well, was like 53% compounded annually for about 10 years. 53% compounded annually. If you took out some of the top performers, like the 3 or 4 top performers, you still got above a 25% compounded annual return. And I think I eliminated the top 4, not the bottom 4, the top 4. The top 4 best performers gone. And you're still above 25% compounded annual. I think it was like 27 or 28. So do what you can. Ride through the bull market, buy as low as you can, and ride the dang thing. That's kind of what I've learned looking back at history. Fly away, SILJ versus silver. We saw this in the corner here. And again, me and everyone in the community on the website, we were buying bottoms through here. Now we're breaking out. We're in cycle. It's going. It looks fantastic. And it's starting to outperform silver, which is great. That's the bull market. CNBC, Lloyd Blankfein says, I'm extremely bearish, but I'm 100% long equities because the Fed is going to cut rates in the middle of a bull market, according to good old Lloyd. Giovanni says, the demand for oil is growing at over 1 million barrels a day of incremental demand every year. I worry more in the next 5 or 10 years, where's that oil going to come from? That's the U.S. Energy Secretary Wright. That's exactly my worries as well. I look out in the future and I'm like, where's all this oil going to come from? We don't know. Good luck. Let's see what prices get to. Freight futures AM update. Dry bulk, Capesize down 2%, Panamax flat. Tankers are up big. VLCC is up 6%, Suezmax is up 2%. Munger and Buffett and how to handle your mistakes. Let's read through this real quick. It says, so Munger and Buffett and how to handle your mistakes. Charlie Munger says, one trick in life is to get so you can handle mistakes. Failure to handle psychological denial is a common way for people to go broke. You have made an enormous commitment to something. You have poured effort and money in, and the more you put in, the more that the whole consistency principle makes you think. Now it has to work. If I put in just a little more, then it will work. And deprival super reaction syndrome also comes in. You're going to lose the whole thing if you don't put in a little more. People go broke that way because they can't stop, rethink, and say, I can afford to write this one off and live to fight again. I don't have to pursue this thing as an obsession in a way that will break me. Part of what you must learn is how to handle mistakes and new facts that change the odds. Life, in part, is like a poker game, wherein you have to learn to quit sometimes when holding a much-loved hand. And Warren Buffett says, a prime rule of investing, you don't have to make it back the way you lost it. You know, I see a lot of people come through the community, and I've heard quotes like, I don't want to sell it, I want to kind of make back, you know, if they're down on a position, I want to make it back. You don't have to make it back in that company. If the company isn't that great, sell it and move on. Or if there's a problem with the company, maybe they took on too much debt and it's just better to sell it, walk away, salvage what you can, and go into something else. Now, the difficult part is, what if it's just volatility? If it's just volatility and the business is doing well, well, then you want to buy more. And that's really what you have to figure out. When do you fold the cards? And when you double down, or maybe not, I'm just using it as a quote, when you add to the position. If the business is unaffected, I would add. If something is changing material with the business that may impact them in a negative way, like they've got too much debt and it's impacting them where they have to sell assets, they're struggling to meet that debt, it's really weighing them down, then yeah, that's a different scenario there. Grady says, been saying good times for silver miners are coming. They are now moving. Posted this chart 18 months ago and linked post below saying it was time to buy the large silver miners. It was. This is kind of guidance that you need to make that big money in a bull market. So that's SILJ versus SLV, and it's the slingshot move around the bottom arc or probable end around the blue, end around apex move coming. My own term and pattern, it's now happening. So that looks pretty good as SILJ is starting to outperform SLV, which is the physical silver ETF. Looking good. And that's all I've got for today, guys. So that's where we're going to end it. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you like. And that's all I've got. So we'll catch you next time, guys. See you.